All right, let's talk about Box. The company just dropped its Q2 numbers, and wow, is there a story to tell? On one hand, you've got this huge, ambitious pivot into AI. On the other, you've got a market that seems, well, completely unimpressed. So what's really going on here? Let's get into it.
So here's how we're going to break this down. First, we'll hit the highlights from the quarter. Then, we'll peek under the hood at their AI strategy. After that, we'll try to figure out why the market is acting so quiet. We'll look at what's coming up next, and then we'll wrap it all up with our next call trade idea.
Okay, first things first. Let's look at the headline numbers, because by just about every measure, Box had a really solid quarter.
I mean, this was a clean beat. No two ways about it. Revenue came in at $294 million, nicely ahead of what analysts were expecting. Same story for earnings per share, 33 cents, a solid beat there too. The big takeaway here? Operationally, the company is firing on all cylinders. They outperformed, period.
Now let's zoom in on a few key metrics. This one, 16%, is a big deal. It's the growth in what's called remaining performance obligations, or RPO. You can just think of it as future revenue that's already been contracted and locked in. And a 16% jump, that's a really powerful signal that the business has strong momentum.
And check this out, 103%. This is their net retention rate. What does that mean? It means their existing customers are actually spending more money with them than they did before. They're not just sticking around, they're upgrading, adding more people. That's a super healthy sign for any software company.
And all of that adds up to this, $1.5 billion. That is a mountain of committed future revenue. It tells you that customers are really buying into the long-term vision. They're not just trying it out, they're signing big, multi-year deals, which gives Box a ton of visibility into what their business will look like down the road.
So you gotta ask, what's the secret sauce here? What's driving this strength? Well, it all comes down to one thing, AI. They are going all in on making Box the go-to AI platform for all of a company's content.
And their CEO, Aaron Levy, he just nails it with this quote. See, something like 90% of a company's data is what you call unstructured. It's all the messy stuff. Contracts, marketing videos, design files, PDFs. For years, that stuff has been impossible to automate, and Box is basically saying, we're going to be the ones to finally tame that beast with AI.
So how are they going to do it? Well, it's a pretty smart three-part plan. First, they're bundling all their coolest AI tools into a premium package that's getting snapped up fast. Second, they're building these AI agents to do the heavy lifting, summarizing documents or pulling key data out of contracts automatically. And third, and this part is really clever, they're playing nice with everyone, integrating with all the big AI models and platforms out there. They want to be the Switzerland of enterprise AI.
Okay, so this is where things get weird. The results were great. The AI story sounds fantastic. So why did the market basically just shrug its shoulders? Why didn't the stock pop?
You've got this real tension happening. In one corner, you have the bull case, a strong beat, they raised guidance, and their AI products are clearly taking off. But in the other corner, the market is looking at that 3% billings growth and comparing it to that awesome 16% RPO growth. Investors are basically saying, that's great, you have promises for future money, but show us the cash coming in the door now.
And this chart tells the whole story. The options market, where a lot of smart money plays, they were betting on fireworks. They were pricing in a huge, almost 10% swing in the stock price, up or down. And what actually happened? A tiny little pop, less than 3%. It's a total disconnect. It's like everyone is just holding their breath, waiting for the other shoe to drop.
All right, so what's next? How is management planning to deliver the proof that Wall Street is waiting for? Let's look at the road ahead.
First off, they put their money where their mouth is by raising their forecast for the entire year. That signals a lot of confidence. But, and this is the big one, all eyes are on this number right here, the Q3 billings growth guide. They're forecasting about 10%. If they hit that, it's the proof everyone's been waiting for that the story is real.
And they've got a packed schedule coming up. They just brought in a new heavy hitter to run sales from Google Cloud. But the main event, the one you need to circle on your calendar, is their customer conference, BoxWorks, in mid-September. Management has been hyping this up, promising their biggest set of launches as a company. This could really be their make-or-break moment.
So that brings us to the final crucial point, the so what. Given this whole setup, how might an analyst actually position for what's coming next?
I mean, you've got this perfect storm, right? You have a strong company with a great story, a nervous market that's waiting for proof, and a huge, potentially explosive event right around the corner.
So here's the idea.
A long straddle using options. Now, stick with me here. This is pretty cool. This is not a bet on whether the stock goes up or down. It is a pure bet that it's going to move a lot in either direction. You're betting on an explosion, not the direction of the blast.
And here's why it just makes so much sense in this situation. BoxWorks is the catalyst. If they announce something game-changing, the stock could rocket higher. If they disappoint, it could fall off a cliff. The long straddle doesn't care which one happens. It's designed to profit from the size of the move. You're basically capitalizing on the market's uncertainty.
And of course, we always have to say it, this is for informational purposes only. It is absolutely not financial advice.